Busy day for earnings. Earlier this morning, we got results out of GE and 3M, among some other major industrial players. Joining us now to talk more about GE's latest results is Nicholas Heymann. He is an infrastructure co-head over at William Blair. Nick, thanks so much for jumping on this morning to talk about it. Let's start with GE, and I guess I'll come at it from the generalist perspective of, I know we've got new management in there. I know there's a turnaround plan in place. Today's quarter, what does that tell us about the state of Larry Culp's program at GE, and how are we to think about where this business is headed over the next couple of years?
Yeah, I would say today was kind of a block and tackling quarter. Nothing really pronounced. The historic barometer for the company's performance has been free cash flow generation improvement. This quarter, the company had a use of $800 million, which was a $1.7 billion improvement. But the company is now removing factoring, which is a way of accelerating your receivables. And they're going to do that here in the second quarter. And that'll be a $3.5–4 billion impact. So they're kind of excluding that from their guide of the year because it's a one-time effort. But again, Larry's trying to sharply reduce the debt, trying to really take out all the artificial enhancements that were used in the past to buttress the company's performance, and certainly make the company a lot more focused and less complicated. The sale of GCAS to AerCap is going to help delever significantly, and in fact will allow GE Capital to be folded in and ended. So you only have one balance sheet, one cash flow statement, and one earnings statement. So the company's on track. This is a transitional kind of quarter, or I would say even first half, because of the pandemic's impact. The second half, aviation, which is a big driver, will come back. The performance of aviation was less adverse than their peers, but that reflects GE's disproportionate representation on narrow-bodied aircraft, and the fact that that's regionally where we're flying now, narrow-bodied aircraft. So overall, it was no big eye-opening or crazy news in the quarter.
Hey, Nick, it's Julie here. I want to dig a little bit more into aviation. It's interesting there that the balance sheet stuff might finally be getting improved at General Electric. So aviation in the second half of the year, as you see things improving, the company saw a drop of 28% in sales in that division, year over year, I should say, in the quarter. What kind of numbers are you tracking in the second half of the year? How much do you think that demand is going to come back?
I think by the time you exit the year, GE's probably going to be looking at 20% year over year improvement in overall revenue. And that'll be led by more overhaul and maintenance, although we're going to have higher production on the MAX as we exit the year, and they're the sole supplier for that aircraft. So that'll help. And they're also the leading supplier for the Airbus 320neo, and production is going up incrementally in the second half for that aircraft platform. So, really at this point, aviation's got all the wind at its back. It's got overhauls and shop visits that'll start coming up. Spare parts sales will lead as your flight hours, recover. And a lot of the airlines now are really starting to be constrained by the number of pilots that's available. They laid off a lot to be able to reduce their cash burn last year, and now they're trying to find them. And you can see even some wide bodies being put on transcon routes here, so you can, if you will, stretch the availability of those pilots to be able to move more people, because people are really signing up. The number, I think GE was down 34% in terms of flight hours for its engine base year over year in April, and that compared with a 40% decline in the first quarter. So things improved in March and are improving further in April.
Nick, where is GE's stock price a year from now, and when do you think they'll be back to raising the dividend?
Good question. Our guess right now is that sometime in the first quarter, you got a good shot at $17 to $18, stock price. And that's going to be probably driven by a couple of things. First, the sale of AerCap is probably going to be completed by, roughly year end or first quarter of next year. That'll help, dramatically reduce the leverage. There's $24 billion of cash that is being received to reduce leverage, and there's $6 billion of AerCap stock, which is now worth a bit more because of the increase in AerCap price, and that'll probably continue as the airline commercial travel continues to improve. But I think there's some other things here. You're going to basically get rid of GE Capital, and in the process, I think there's an increasingly good chance as you find that claims are coming in much lower than expected, and returns on the investment portfolio are better, and pricing is better, that at some point here, they'll find probably somebody to buy or take over long-term healthcare reinsurance. And that would remove the last asterisk on perhaps GE's financial strength and or concerns about their balance sheet. Today, good news was that, there's no more pension contribution perhaps for the rest of this decade. That's partly due to pre-funding last year of $2.5 billion, and partly due to, again, investment portfolio performance for GE Pensions assets. And lastly, and I don't quite understand this yet, the American Recovery Plan that was passed, the $1.9 trillion plan, that apparently has some benefits in it for GE's pension. Not sure what those are. I got to figure that out. But that was encouraging. So pension is now, if you're looking for less draws on the cash and then more cash that can be returned, as you mentioned, to shareholders, my guess is that's something we'll hear about in November of 2022 in terms of a dividend being, meaningfully restored.
All right, the turnaround story continues, but slowly getting more clarity on what the future of GE looks like. Nick Heymann is the co-head of Global Industrial Infrastructure at William Blair. Nick, really appreciate you jumping on, talking through the quarter. I know we'll be in touch in the quarters ahead.
Okay, thanks so much. Have a great